Hello, welcome to today's Fat Tail Daily video. I am James Woodburn, publisher here at Fat Tail Investment Research, and today I'm joined by James Cooper. James, how you doing, mate?
Good, thanks, Woody. Thanks for having me along.
Yeah, good. Well, you wrote a really good piece today, and you drew parallels. Now, I should probably say that your area of expertise is the resources sector. You're a former geologist, and you've had a lot of experience you've been on the inside of companies, both on the buy side of takeovers and the sell side. So you draw parallels in today's piece between the M&A activity in 2011 and today's market, suggesting we're more like 2004 than in 2011. So what I was going to ask, what key indicators are you watching that might signal we're moving closer to a peak in the M&A cycle for the mining sector?
Yeah, so I think we're still a few years away from a peak, but I think we're definitely heading towards the upswing of M&A activity. And one of the really good signals, I guess, we had earlier this year was with the BHP offer for Anglo American. Even though that deal didn't go through, it just shows you that activity is starting to build up. And when you mentioned 2011, I mean that was probably the peak M&A activity for the mining sector. It was really sort of peak hubris and activity. There were bids and counter bids and counter offers. And as you said, I was a geologist on the ground at that time. Maybe we can go into a little bit about the background and the history of.
Yeah, do it. Why don't you start with that?
Yeah, sure. Okay, so as some readers might be aware, so I used to work for Equinox Minerals. It was an Australian based company, but it had its operations mostly in Zambia. It also had some in Saudi Arabia. It was just focused on copper. So I joined the company in, I think it was early 2010, and this was really at a sort of peak in the mining cycle. Commodity prices were high, and of course M&A activity was also really ramping up. And Equinox is really sitting at the heart of that. It was a company. It was, I guess, one of the market darlings. It was copper, which was a really hot demand at that point in the cycle. And so Equinox, it really kicked off this sort of M&A activity. It put in a bid for London Mining, which is quite a well-known company now. But while that took place a few weeks afterwards, the Chinese company MMG walked in with its own offer. I think it was a bit over $4 billion. That the Equinox board, knowing that the market was pretty hot, they fished it for a higher bid, and eventually that came through with Barrick Gold with a $7.2 billion offer. There were plenty of opportunities for investors to look at companies that had potential for merger or for acquisition potential. And Equinox is really sitting in the middle of that. And so it was a good time being on the ground and seeing all that firsthand. And I guess in hindsight, it's obvious now that really marked a peak in the cycle, just all the hubris that was going on. But at the time, there were veterans that had been there for 40 years, and they said, we've still got a long time before we ever hit a peak in the market.
Well, you mentioned copper there and China, and I guess despite recent corrections due to weak Chinese growth, you mentioned that copper futures prices are rising as well. Can you elaborate on the factors driving that apparent contradiction and how sustainable you think the trend is?
Yeah, and that might seem like a bit of a contradiction, saying that copper prices are up and China growth is down. But yeah, if listeners look at today's edition of Fat Tail Daily and look at the 5-year chart that I've included in there. Mm-hmm. Now, on the short term, copper prices have pulled back fairly significantly, so 20% since the May top. But if you look at the longer term, so the 5-year chart, you can see that this is just one of several major lows or significant lows over the last 5 years, which have all been trending a little bit higher. So a sequence of higher lows, and that just tells you that the long-term trend is still in play, and I think we will see a retesting of those major highs that we saw in May earlier this year, around $5 a pound. That might be hard to see with the China weakness story coming out right now. But again, I think if copper can hold around $4, it's already starting to tick higher from that level. And I think if it continues to do that, I think that just looks technically strong for copper.
So that's the technical picture. One of the things that you mention is you emphasise is the importance of supply in the copper market. Now, can you just discuss some of the major challenges or bottlenecks you see in increasing copper supply to meet future demand, especially, I guess, especially in light of your experience as a exploration geologist?
Yeah, so I guess as an exploration geologist, we see that firsthand, the supply issue, because that's what we do. We go out and look for copper deposits, and there's a number of charts that I've shown in the past that new discoveries have hit sort of multi-decade lows. The last 10 years have really been amongst the worst for a long time for copper supply. And it really actually does come back to this story, this peak from 2011, when all these a lot of these big mining conglomerates overpaid for these acquisitions, and since then have really been burned and really reluctant to put any investment into future copper supply. So that's also carried over into exploration and to development. So I think the hubris, so the big boom period from 2011, is really having had a bad effect on the market in terms of supply, because it's stopped investment. So that will carry through, and that will have longer term impacts. So I think that's the overarching theme for copper that will drive prices higher into the years ahead.
So do you anticipate a surge in strategic acquisitions from here as companies position themselves for a potential supply crunch in copper?
Yeah, I think so, because these companies haven't these big companies, which historically, traditionally did lead exploration. It wasn't always up to the juniors. The big companies like BHP and Rio Tinto used to have huge exploration departments. They were really the global leaders in driving discovery and exploration, but that hasn't been happening over the last 10 years. And because these companies haven't been investing in new projects, they will need to start buying up new projects to resupply their depleting deposits. So that's where the M&A merger acquisition opportunity really comes in. I think we've seen that already with BHP. We said the Anglo American, but also Filo Corp, a big undeveloped copper project in Argentina. We saw Rex Minerals in South Australia, another copper project. So I think there'll just be, I think these are still early signs. If you look at today's Fat Tail edition, you'll see that M&A activity is still well down from sort of historic or from the mean. It's I think at about a 20-year low. So there's still plenty of room for growth for M&A, and that's despite sort of copper prices and resource prices trading relatively high.
Yeah, I guess your point is that it gives you a sense of where we are in the mining cycle. Can you just give, to finish off, what types of companies or assets do you think will be prime targets of the bigger fish trying to buy up the smaller assets?
Yeah, so I think that's where companies like Filo Corp, Rex Minerals, these companies which have been sitting on these undeveloped projects, but really need the big miner to walk in with a lot of liquidity to to help them develop those projects. So they may have had these projects for a number of years, but as copper prices tick up and the supply issues really start to come to the forefront, I think that's when these big deals will start happening. And as I said, I think we're already in that cycle now with what's happened earlier this year. Obviously, that's been on pause a little bit with some weakness from China, but I think the long-term trend is for much more activity in M&A, and I think rising commodity prices will be the key driver.
Awesome. Well, there you go. That's James summarising his Fat Tail Daily edition today. If you're watching this via YouTube, please do give us hit that subscribe button, and you'll be notified when the next piece comes out, next video. And if you're on the website, like I say, if you're not subscribed to Fat Tail Daily, do so now. It's absolutely free, and you'll get a key idea on the edge of the bell curve every single day. James, thank you for your time, and we'll be hearing from you next. When do you normally publish?
Next Thursday. Just filling for Brian today. Yeah, that's right.
Cool. And we'll be hearing from Brian Chu on Thursday. Till next time, guys. Thank you, James.
Thanks, Woody.